Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Thursday evening, the 3rd of December, 2020. It's just after 7 p.m., so I've had a hard day. It's been a long one. A lot of trade recommendations to review, a lot of research I've been doing. It's just been a rough day, but a good day for the markets, I guess. An interesting one. You got to remember, we heard from Pfizer, BioNTech, and they had said that the amount of dosages they're going to have in December, cut it in half. It's logistics problems, production problems, not vaccine problems. That's the important thing. The pandemic in America, out of control. That's the words I want to use. I think it's going to be worse and worse. You know, we saw that holiday travel, and it's brought with it the spread, as Dr. Fauci said. And speaking of him, he has been invited to join the President-elect Biden team, assuming that President-elect Biden gets the electoral votes and becomes president of the United States. We'll have continuity. He will move over to that position. And I hope he brings the other doctors with him. It's been a very fine team. Be a shame to lose him at this point and all that. OPEC reached a talk today. I'm looking to see, do we have anything up here on energy? Not too much. But they reached an agreement to increase production by 500,000 barrels a day for the month of January. How it gets spread around, who gets to produce, how they get from people that were cheating, overproducing. Up to this point, I don't know. But it's a 30-day deal, and then every 30 days they're going to do a review. Okay, so that's another positive as I see it out of the market. We still don't have a COVID-19 relief bill. As much as you'll hear the Democrats, oh, we've dropped down to $908 billion, it's double what the Republicans had on the table of $500 billion. Will there be movement on it? I don't know. Will the president want to make that movement on it? Is his last act going to be able to create another billion in debt? He might. Nothing wrong with it. I mean, you can weigh this any way you want. Let's take a look at PAVE, P-A-V-E, the infrastructure play. As I told you, I thought that it was going flat, and that's exactly what the chart has done. You've got a pattern now of higher lows, but also, do you see this, lower highs? So you're coming in like that. It won't last very long. It's going to break out of that one way or the other. Traders call that a wedge. That's what I would call the chart term. If you take out the 2034 level, I'd look for the market to make a run to the 18-day average. If you can take out 2071, why not make a run for this high again? Let's take a look at Bollinger Bands. They're at 2109 and they'll drop tomorrow. So my guess is early on when the market opens, they've been dropping. If you look at that 2109 figure, about 8 cents a day right now. Today was 8, so let's assume it's something between 2 and 8 cents. So probably 2107 to 2100, and that's against that high that we got right in there. So that would fit in for a resistance point. When we take a look at momentum, you lost the embedded reading. When you lose an embedded reading, the odds favor that price and the closest moving average are going to come together. That's the 18-day average in this market. That's what I'm looking for to happen. For me to be wrong that that's going to happen, you got to get back over the high you had right here. And that number, as you can see, was 2095 exactly. Then no, then that trade didn't work out, or that contra trade of a trend didn't work out. SMH, you're right in the resistance point. You have the embedded reading. Got to be careful here. I think the pros are taking money off the table, and I think they'll buy again if they get the opportunity, as long as you keep this embedded reading. The question is, the odds of getting over and staying over a Bollinger Band are just 5%. 95% it won't. Therefore, it can run there and push on it, but sooner or later it generally gives ground a bit. We'll see what happens. Taking out 211.40 isn't important. What rules the day is the embedded reading. Until it's lost, I stay in the bull camp. XLI, you've lost the embedded reading here too, and I've still got a target of the 18-day average of closes. You have to get back over the highs up here to prove me that my theory's wrong. But what's really happening is the 18-day average is moving up as prices are really drifting sideways, so the price break isn't there the way you would think it is. In the energy sector, seeing OPEC reach an agreement is good. The market's been in a corrective stage. It lost an embedded reading, which often leads to price and the 18-day average coming together. The highest high this market had is right here. That number was 40.42. That is the number that if you can get over it, you catch this group of people that thought the market was going to come down to that number. That's how I view the market. Are we in a trend? We are not. Would I want to touch any of the energies until we get through tomorrow? No. You should ask me why not. And the answer why not is a very, very simple one. You want Asia and then Europe to react to the OPEC news. When the OPEC news came out, Asian markets were closed. People do sleep. Analysts do sleep. Let that take place, then you take another look. QQQ, embedded reading, fighting with the upper Bollinger Band, still strength. Until this market loses that reading, I contend that price breaks will be bought, and they'll keep looking for the market to go back to the Bollinger Band. I talk about this in my SPDR ETF because there's a way, you don't just buy on the break. It's got to have a certain formation to do that. And I review every day in the afternoon for my subscribers exactly what that formation is. When we take a look at the emerging markets, you can see you've got the embedded reading. Could be that it wants to head up to that 72.57. Again, until that's lost, I think pullbacks are bought and the big trend stays in place. GLD, I'm not looking for anything more than the 18-day average. I think this market's come up high enough where now it's got to figure out what it wants to do for the next trend. It's out of a trend. It's got a lower low, higher high, and a lot of resistance, as I see it at least, at the 18-day average. Gold miners, you went right up to the 18-day average, stopped just literally right on it and fell back to the 200. This is the type of action I'm expecting gold to happen, barring some crazy news overnight that would make metals just go crazy. In TLT, I can see the trade trying to get short this market at 158.39 with stops over these highs, trying to see if it can come back down and challenge the current lows that the market just made, something in the 155 area. FXE, you've got 3 days in a row over the upper Bollinger Band. Nah. Even though it's got an embedded reading, you got a 2% chance, the way I teach, what you do over a Bollinger Band of staying up and over that number tomorrow, 98% chance that it'll fall the other way. It's not a sign to go short. It gives you an idea that the market, the odds are that the market's going to try to pull back within a bull trend. You're looking for ways to what? Get long. I talk about that and other parts, by the way, in my Euro currency video report that's on our website at www.iraepstein.com under the word research. Take a look. It goes off tomorrow. So come Monday, you won't have that as I understand it. I only keep them up 3 business days, and that's the lifespan I want them to have. One other big announcement for you. I know a lot of you want to take my charting course. You look for the deals that I could put out from time to time. There's plenty of people that buy it without the deals. But I do offer a Cyber Week deal and a Christmas deal rolled into one. Buy 1-year subscription, which we discount from our normal prices to begin with, of any of my research, my full research for futures, my morning futures video, this video. 1 year, I'll give you the course for free. Now let's understand what we're talking about. The course at $199.95 is more than the video for the SPDR futures for 1 year or the futures video alone for 1 year. I don't think that's too bad of a deal. But the key is, got to buy it for 1 year up front, then you can take the courses you want. It's $199.95 if you buy it on my website. It's 6 hours of videos. You will learn to do what I do and how it comes together. And then my subscriber videos and all this just crystallizes. I'm not going to offer this again. So this is your free offer. I've never done the free offer that I can recall for the 1 year subscription. Take advantage of it. How? Just go to the website. Under the word, when you go to www.iraepstein.com, under research, buy any 1 year package. We'll recognize it. We'll get hold of you, and you will get the course. We'll contact you and all that. I'll be sending out a mailer probably tomorrow on this as well. And it's open-ended until I close it. And that will be all of a sudden. It's a guarantee. That's how I do it. So you want to take advantage? Do it now. $156, for example, gets you the whole futures morning video, and you get the $199.95 course free with the charting software and everything you need. I'm Ira Epstein. You have a great day. I will talk to you tomorrow.